guys. Hello, 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 hello. Hello, hello, hello. What's up, what's up, what's up? Let's try continue the green day. Let's try continue the green week. Let's pop up this chat. I did not stream yesterday, guys. I do apologize if you were hoping for that. That was on me. Let's have a green fallout week. Right, guys. Let's find a quick background. Find a quick background. Let's go. Let's go. As you know, guys, we had a crazy Friday. As I finished streaming, they had a huge dump. Go overlay, trading view. Why is it not working? One second, guys. Normally when I change pairs, it should be fine. It picks up a different pair. Go to Euro. This is the fun part, trying to get this thing to pick up. What the heck is going on? AUD? Will AUD work? Let's try AUD. There you go. AUD works. I don't know why it does that, guys. It just, in order to pick up the charts, sometimes I need to just go to a random pair. Like once it's on, I can then go to Euro and all these places and this and that. But until we get to that point, for some reason, I have to just go through all the pairs. Okay, so for those that don't know, okay, on Monday, we just go to the hourly chart, reset chart. Just get rid of some of this stuff. This fibs. Just gonna slow down the. That's been taken, so that get rid of that. Get rid of that. So on Monday, was, I got Monday on set. Yeah. Okay. Okay, so we had just ended our stream, and then this craziness happened where Trump apparently announced that he's going to do 100% tariffs again on China because they were misbehaving, something to that effect. Okay, now the markets went absolutely crazy, as you can see, right? Boom, 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 boom. Everything crashed. There were billions that were taken from the markets of both crypto and the Nasdaq and S&P 500. Um, so big push down, guys. Now we've slowly recovered. So now we're going to see how this plays out. So we'll first do our top down. So we'll go there. Now you can see this big push down is a daily candle. Okay. So we dumped so far on a daily candle. We then came back up. We created a fair value gap. We came up. We tested the fair value gap. And now we're coming down. So until this fair value gap gets broken again, then we can look at bullish. Maybe short-term bullish to go back up there to this fair value gap. But it has tested it already. So what we're going to do is we're going to look at shorts. Okay. Just on the higher time frame, we're going to look at a bearish. See how the 4-hour and 1-hour is bearish. So we're looking at bearish movement. Okay. So it's inverse this, it's inverse that. That was a strong inverse. So we could be looking at a down trend change. So we look at the 4-hour. 4-hour were tested. And now we're looking further down at inversed here. Inversed that fair value gap. So we are looking at shorts. Maybe a potential long to come back up into the 4-hour is a possibility. So short-term longs might be in play because we might be looking at that 4-hour to be tested. There is a 1-hour fair value gap up here as well. So that is a strong liquidity area. So from here to here, we might see some longs. And then we could get a rejection off this area to then come back down to previous day lows. Okay. So if we look at the 5-minute, we saw we just came straight down from Asia. Okay, they took previous day highs and then came down. So either we're coming to target previous day lows, right, which is this level here. So we're either going to come and target that, or we're going to target this area here. And I'm going to draw the circle here. From there, I would say there. Okay. Why am I putting this here? It's because there's an hourly fair value gap here, and there's a 4-hour fair value gap here. So this is a strong area of liquidity that will probably be taken. As you can see, there's a bunch of liquidity to the left here. So this is an area that we could test to come back down here, or we're going to come down here to come there. It all depends on what price does now. We've just taken London lows. Okay. So you can see clearly that this is bounced from a fair value gap that was created on the retracement back up after this big move. Okay. Hence the reason why this bounce here, you know, once you see that V shape inverse, could have been a trade if you were on the charts and if you were looking at this as a trading opportunity. A bit of consolidation there. Okay, not a lot. And then accumulation and then manipulation down, sweeping liquidity, respecting a fair value gap, coming up, inversing, even coming down again. This could have been an entry. If you were if you had a short-term bias of longs, then you could easily either look for this inverse on the 5 minute, get in, right? So your trade would look something like this. There's your entry because of the inverse of the fair value gap. You can either put it below the lows there, and you would target there, right? This would be your trade. Why would this trade be an interesting trade? We've now swept because of this, all right? Let me go. We swept this. There is a higher time frame fair value gap here, right? That it's respecting. It then created a fair value gap here, right? It's not a big fair value gap, but it is still there. Strong green candle up, closing above the fair value gap, not taking internal liquidity, right? I know this line is a bit messed up. Let's just do this. Okay, it did not close up here somewhere. It closed just above. So technically you could have taken this, even though this is a downward movement. However, it is very close to previous day lows, but because of this fair value gap, okay, it's more than halfway past the fair value gap, which means this is being tested. It's swept liquidity. There's a couple of ducks that are in a row here, okay. It does not mean that this now has to come up to this area, right? That's not what it means. It just means that there's a fair value gap it's respecting. It's London lows that it took, okay? And with those two things, when there is a strong upward candle inversing a fair value gap at the key level that we looked at, then it is a sign that if you did take this trade, you would already be at break even by now, so you'd be risk free, right? But that is one of the reasons why this trade would technically work, okay? And I say technically on paper, however, the time of it, it's 640, 650, so the time works against you, because if it was like here, for example, that's one thing, or if it was here during New York session, that's another thing. But it's in between the two, so it's the time is the only thing that's like, yeah, you know. But the behavior of it is fine. There's nothing wrong with this behavior, right? It is more of a risky trade. Ideally, you would look for a inversion, right, which is what happened. Then it would come down into this fair value gap it created here, right? So it created a fair value gap. So this candle here would then come down into that and bounce off. That would be the safer thing to wait for. But this inversion looks like it might actually work because of the fact that we delivering from a higher time frame fair value gap and we've swept London lows. But again, this still, I think, is still going to target the previous day low level, but I think it might come up here first before it targets this level. That's my opinion, right? Also depends on what ES is doing. See how ES also inverse the fair value gap there. It also took liquidity, and I'm betting, there you go. Okay, so ES looks exactly the same, and there was an inversion there. So a lot of the rules are still the same. So that would have been a decent trade if you were. We're just looking at the charts right now, guys. Okay, we got some accumulation happening on gold. Let's do a top down for gold. So we look at the daily. As you can see, it's just been pushing all the way up. Okay, we have a bit of a rejection of all-time highs. Again, there's nothing to the left for us to judge anything from. Like if there was liquidity here, then we can look for shorts, but it's just nothing to judge it off. Okay, so in order for this to be bearish, this fair value gap has to be inversed when it's created after this candle. So tomorrow it'll inverse the fair value gap. if this were to be a trend change, right? Market structure shift. So you would try and inverse this fair value gap as well. Then it would come up, test this area, and then come down, and then we would start looking for shorts. Okay. Until that happens, there's not much we can look for. The 4 hours respected this fair value gap, pushed up. Nothing to see. Respecting an hourly fair value gap, we have bullish on the 4 and the 1. It's just, and now we just go sideways. So we have a bit of accumulation. So what I would say is that if there's upward manipulation, sweeping this area up here, respecting this fair value gap, okay? So I would draw that. Just give this a little bit of color. So that's a 5-minute fair value gap. Right. So we have a 5-minute fair value gap. We have another 5-minute down here, which isn't as big as this, but it's still valid. So my guess is that either way, if we have there's another one over here. So if we have a strong downward movement and respects this fair value gap here, then we could look for a inversion to go up, okay? Because you see we've taken previous day highs already, okay? And this would be basically bouncing off the previous day high level, okay? So if we came down, this is what it would look like, guys. Pathing, so we're coming down into this area, we inverse, okay? Could even come up a little bit more, come back into that fair value gap area, and then look at this. That's what we would be looking for. Let's do the brush, and let's say it leaves a fair value gap here, and then we come back down to retest it. We inverse it here somewhere. So that's kind of what we would look for, if that makes sense. Okay, so that's gold, right? Also, guys, another thing, if you draw fibs from the top to the bottom, like that, the fair value gap below the one that we kind of said that it should theoretically bounce from is also a target, guys. So this one here, right? Now, I don't want to draw too many fair value gaps because it makes the chart look a bit weird. So this is also a very, I would say, tempting fair value gap to wait for. So if there's a strong move down and it bounces off one of these two fair value gaps, leaves a fair value gap of its own, and we strongly inverse it, then we could look for a long up. This would be the AMD model, guys, because it would mean that it's sweeping this liquidity, it's filling the liquidity left behind by the fair value gap. It's almost market open for Forex. Let's look at the economic calendar. Today, how much news is there? We have not much, actually. There's a bit of Canada building permits, MOM, but it's not really massive. United States Fed Bowman speech. Euro area, looking at news, guys. 12:20 is United States Fed Chair Powell speech. So we have Powell speaking at 12:20. That's interesting time. So until then, so guys, look at what I mean. Okay, this is now coming to this fair value gap, right? If it leaves this gap alone, so if this candle just hovers for the next 3 minutes and does it where, like, just stays where it is, and the next 5-minute candle closes up here from here, then this is a typical AMD setup, and it would be something that I would draw up as a call out. But that would need to happen. So this price needs to hover here or needs to come down to this fair value gap. One of the two. If price now with this candle for the next 2 minutes and 40 seconds goes up, and messes around over here, then comes down, then there's no fair value gap for it to play with. So that is what I would then look for. I would draw up the call out, okay, like this. So this would typically be the call out. And we would either target highs, or you would go 1 to 3 or 1 to 2, whatever your strategy is. 1 to 2 is there, so that would be a good target. Okay, 1 to 3 would be amazing. 1 to 1 again would be like doable because you're just targeting these highs. So that would be the call out that I would draw up on the chart. Again, if this just melts, then this is invalid. It's not even a thing. So it all depends. So let's see what happens. Okay, let's look at euro. We've still got a few minutes. Okay, euro is going to be, we're now starting to move downwards. We're into a fair value gap. See how this is a daily fair value gap we just entered. We are respecting it. So this can potentially come back up where there's no real fair value gaps. So yeah, I would not surprise me if it just keeps going down. Look at the 4 hour. Okay. The 4 hour is up and down, up and down. There's not too much happening. It has taken previous day lows. Okay. So if anything, we could target the previous day highs. It's in a fair value gap on the 4 hour. So it's a strong draw in liquidity, I would say. There's also an hourly fair value gap for previous day highs. So this is a interesting, I would say we look for longs, but this could just respect this fair value gap and dump all the way down. But in terms of targets, I would say that we would target previous day highs, in my opinion, which is not always correct. AUD, well, let's just look at the 5 minutes. See if there's a setup. Let's get rid of this. Okay. So, two things here, right? Technically, this is an AMD setup right here for a short. Okay. Accumulation, manipulation, fair value gap respected. Liquidity swept. All this liquidity swept. And now it could potentially inverse this fair value gap that's on the previous day low to then either target this area, right? So this is a target, or previous day highs. Okay. So this could be a thing, a short move to come down here. So you could catch a 1-to-1 or a 1-to-2, right? Because market is open now, so volume is coming in. So there's your fair value gap. Let's just look at our gold. Okay, so now we have a fair value gap here. Okay, there. So we'll see what this candle, where it closes. If it closes above, then we could look at a long. For euro, if euro closes below, then we could look for a short. I would say a short down to this area, okay, which is London lows. And then we'll see what happens if it does get here. So this is looking like this might happen. And you would either go to the bodies or the candle at the top. A super safe trade would be literally here, okay? A stop loss. However, you could do the bodies, just above the bodies there. So it all depends on where this candle closes, right? And then you would target this area here for a 2.2 trade and be decently happy with that. Like that. This is if this candle closes below here, you would then enter. Okay, I'm just drawing it up so that if anybody's interested, then this is what I would look for. Okay, as we said, guys, this is a very key level here, right? So if it comes down to bounce on this level here, there could be a 15-minute fair value gap that is created. See, so in this case, if this comes down here, we would look more of the 15-minute fair value gap and not the 5 minutes. Okay, does that make sense? Because there's two fair value gaps. If it bounces off the first one, we look at the 5. If it bounces off the second one, we look at the 15. Everyone understand that, okay? And the reason for that is because there will be at least 1 or 2 5-minute fair value gaps here, okay? Which means you would then look at the 15 anyway. AUD, let's look at AUD. Respecting a fair value gap. As you can see, there's a fair value gap to the left here. So this literally could come up a bit because we could respect it. Or we could close below it and then really go down. So there's been a move, respect, move, comes up, respects, move. You would now expect it to come up into this 4-hour fair value gap and then decide from there if it's going to go back up or it's going to respect it and come back down. Okay? Makes sense? See how there's a 4-hour fair value gap here and there's a 1-hour fair value gap. I would expect this to come back up into this area and test it and decide from here what it wants to do. That would be my opinion. Okay, we have created a London low. We then came up, respected a fair value gap, came down, swept the London lows, right? We are technically respecting another fair value gap on the 15. Let's go to the 5. Let's see if we can make sense of this. We sweep London lows, right? We come up, we come back down to take even more. Then we inverse this fair value gap to come up. We've inversed it. Okay, this is a little bit interesting. Because we had a bit of accumulation there. So if you look at... Interesting. I'm trying to stay on the 5, guys. Everything's looking a bit bearish. Remember, guys, OTE level or golden pocket level is here. However, this is still a strong area here that it could just bounce off and go back up. It could happen. As I said before, if it goes up from this fair value gap, we use the 5 minute. If it goes to this fair value gap, we use the 15. Right? NASDAQ, if you got into this trade here, I wasn't online. I did not see this happen. This is just after analysis. I'm just saying, if you were looking at this and you got in, then you would be at break even, and this would be a break even trade. Okay, I need to make that very clear, because some people think that I'm claiming this after the fact. No, I'm just drawing up the fact that that was a potential entry. It just looks so clean as well, because there's a 5 minute inverse there, there's a 5 minute inverse there, respects a fair value gap to the left. Oh well. So this is what I'm talking about, guys. In 2 minutes, okay, 2 minutes and 18 seconds. Now, obviously, if this candle now closes down here somewhere, then this trade is not, you can't take this trade, right? But if it closes where it is right now, then you can take this trade. Again, I am not a financial advisor. I'm not telling you to take anything. I am merely stating my peg opinion and my idiotic opinion and my unlucky opinion. I don't know how many different ways I need to say it, but this to me would be an A setup to target this area. I would not say this is an A plus setup. This would be a B plus or A setup, because here's a fair value gap, right? We delivered from, we respected it, okay? Accumulation, right? So you have this accumulation, then you have manipulation, taking a bunch of liquidity, respecting the fair value gap, right? And we've got that creates a fair value gap. We inverse the fair value gap, and if it does come down here somewhere, then you don't have to get in straight away. So you don't have to do this, okay? You can wait for it to come back up into this area and then take the trade. Okay. See how it's going a bit far down? And you're more than welcome to take it down here. You would just have a bigger stop loss, or you drop your stop loss to there and you take it there. That's still valid, right? That's up to the individual. But you see how this is inversed, right? This is AMD. Right? This is classic AMD setup. The only problem is this candle is running away from us, okay? So you would wait for a retracement back up, and then you would take it on the retracement. Does that make sense? And if there's no retracement, then you've missed the trade, and that's it. You've done. Right? You don't chase it down here. You don't go, okay, now let me do this, and let me do this, and now let me get in. Like, you just don't do that, okay? These are all the mistakes I've made in the past, right? Either you wait for the retracement to come back up, you leave your stop loss where it needs to be, because your stop needs to be where your stop needs to be. It's that simple. So if there's no retracement up, then you have missed this trade, and it's not going to, it was never meant to be. But do you guys understand what I mean when I say AMD setup? Okay? I've got to make this clear for the people that are All of this is accumulation, okay? But from here, you got accumulation like this. All of this accumulation, right? It manipulates it up, okay? It then came down like this, right? And hopefully is going to do this. This is AMD for power of 3. Okay? So the only thing I would say that this was not good is the fact that it closed so far down. I can tell you now, if I was still trading live with you guys right now, then if it closed here somewhere, that's the trade I would be in. I would be in this trade right now, okay? I'm just doing call outs right now, guys. I'm not actually physically putting in anything, okay? I would be at break even already because this trade has gone past this liquidity area that I would target. Okay, so this would be this would be a tier. Okay, so this area is an area that when the price gets to, it decides whether it's going to go back up or not. So if it closes below this area, then you know that you're good and it's going to come target this area. And if, for example, you put your stop to break even and price does this and comes back up and hits you at break even, you haven't lost anything. You haven't gained anything. It just means that you've learned something. So either you would wait or you wait for the retracement, like I said. The problem with the retracement now is that it's now swept this liquidity area below, which means the retracement back up into this area, in my opinion, is not as safe as it used to be when it was here. After this candle, if there's a bullish candle that comes up and goes here, for example, and then starts to move down, then you can take it. But if a candle shoots down, sweeps a bunch of liquidity, right, and then starts to move up, it's no longer as safe as it used to be. Does that make sense? Okay. So for those that did take this trade and decided to do this, you guys can still get a 1-to-1 or 1-to-1.5. Okay. You could, but you would not go to break even right now. You would have to wait for this to go to break even. This would be your area here. Okay. That you would look at break even. For those, and let's say you were waiting for this entry here, this would be your area of break even. See how gold has gone so far down? Notice where it's bouncing off here. Okay. It almost came into this area here. And if it had come into this area and closed above into this fair value gap, which it could still do, there's no reason why this candle now can't come straight down into this area, come back up, close in this fair value gap, and then come up and inverse a 15-minute gap. Okay, see how it's created? Now we look at the 15 minutes. We no longer look at the 5. So the 15-minute is the one more relevant right now, as you can see. So we've got a bunch of accumulation. And you could even add all this into the fact that it's accumulating. We got manipulation down. And if it comes up and closes above here, we could look at a long. If it wants to come down and take previous day lows, I mean not previous day, London lows, then that's fine. Then we'll look at a retracement or a V shape for a long. Okay. It all depends on what we are reacting from price. We are not predicting it. Okay. We are reacting from price. Rocket League. Oh, guys are killing me. You guys know that I'm streaming. You guys don't like me streaming Rocket League, eh? Well, I can't jam now. I could jam a little bit later. It's not. It's if someone pops in and they're watching. You know, it's not fair. Especially with the gold that I'm giving you guys. The gold. But I'm super keen to jam. But I do want to see how these setups play out. Also, the guys that might have taken this before the candle closed, which is not recommended at all. But if you had conviction with this candle and you entered it here, knowing that, okay, well, it's going to close here somewhere, so I'm just going to get in early, you would then be in this trade and it would be a very interesting ride down. Not recommended at all. But do you guys see the vision? Okay. If you can see the vision, that's why I'm here. So you guys see the vision. Do a quick scan of this. Just consolidating, going. Not really too much there. Okay, so on the 15 minutes, so it's respecting a fair value gap here. Interesting. Okay. I think today, what I'm going to do, obviously we're doing call outs, guys. So you can see how this is still coming down to this area, which is the golden pocket area or OTE level, okay? And is leaving behind a fair value gap there on the 15. Also here on the lower time frame, or the lower fair value gap here. It'll be interesting if it hits this area and shoots up. This is interesting as well. Top to bottom. One to one or 1 to 1.5. See how it respected fair value gap. I should get rid of some of this stuff. So we have oh, it didn't actually. I thought it came down and respected this fair value gap. But there's your fair value gap here it's respecting. Okay. So it's left behind these two fair value gaps here. So you've got to kind of inverse both of them if you're looking at a long here. But then again, we could have just come to the OTP level here for the shorts. Yeah, you see, this was a key level for a retracement. Since everything is bearish. So if you did get into this one, guys, you would either go to break even at 1 to 1, or you would take your trade at 1 to 1. Or you would just hold it right until you get to the top, whatever. But this would feel a bit weird now. So we are still pumping down. We got 4 minutes and 40 seconds. So now we are hitting the OTE level and the golden pocket area. Okay. So I would expect this to come here. And if it breaks this level and continues to go down, then we will see a sweep of this liquidity, which is the London lows. So if we start shooting up now, then at least there's a chance of taking a long here when this inverses. and targeting up here. So your long would look like this. So let's say it closes like that. You would at least be slightly below the fair value gap. To go all the way down like this is going to be, risk to reward is crazy. So you can either go like that. So there's the fair value gap you are targeting, or you go like this because there's another fair value gap that is probably going to form. And then you would target like that, 1 to 2. Somewhere around here, 1 to 2. This would be your 15-minute AMD setup if it was to come up an inverse. And if it doesn't come up an inverse, then it's not an AMD setup, okay? And it is now just a push down target liquidity. Because remember, for an AMD setup, you need a few things. You need accumulation, which is what this is. You need a distribution, all right? You need it to respect the fair value gap, which is what it's doing. Okay. Let's look on the hourly. There's no fair value gap on the hourly, really speaking. Okay. 30 minutes. Not really. A little bit. Not much to write home about. But anyway, there's a fair value gap it's respecting. It's in the golden pocket area, okay? The OTE level, right? Which is another confirmation. And then and only then, when it inverses this fair value gap, will this trade be valid. Then you would target highs. So accumulation, manipulation, leaves a fair value gap, inverts a fair value gap, and then you target the highs. Now after this inversion, you can wait for a retracement back down to get a better risk to reward if it's too high. But if the close is up here somewhere, then it's no longer really a valid trade because it's swept a bunch of liquidity and it could just change its mind and come back down. So this is going to take a while to play out. Euro. So Euro, you would have been stopped out at break even if you got in here. Yeah, 1 to 1, you would have got stopped out at break even. It is kind of still respecting a fair value gap here. See, remember when I told you that the second it takes this liquidity, it now has to decide whether it's taken enough liquidity. I personally think it's still going to come down to this area. That's my personal opinion. So you could technically, this could be the retracement up that you were waiting for in order to take your short. Okay. And I could be completely wrong because in 30 seconds, if it inverses this fair value gap, then I am wrong on that fact. And then it could just be that it's the inverse for the long. And London lows are not really that important if it inverses. So technically it's on the line of inversing. So I would say technically that inversed, but it's a technical close, which is not good. So my opinion on this setup, guys, is that price, I think, is going to come down to the London lows, in my opinion. However, because we have sweat internal liquidity here, and if you inverse this fair value gap here, then you could literally see a target of this fair value gap and this liquidity level here. So this could be the area where everything changes. So if this 3-minute and 50-second candle here is green in any way, so if it ends green, then this is going to probably go up. So you would need this candle, if you're looking for shorts here, you would need this candle to close here somewhere, at least somewhere here, to show that, okay, now we're still continuing down and this is just a retracement. That's what it would need to show. We have a sweep. Let's just look at the 1 minute. Hey, the amount of trades people can take on the 1 and the 2 minute. Sure. Look at this AMD setup on the 1 minute, guys. Just hits the London lows. Just. Here's the fair value gap. I mean, this presents itself in all the time frames, guys. There's the fair value gap. There's the inverse. There's a small retracement back into the fair value gap. And then it just goes. Even if you miss that, there's the market structure shift. There's the retracement into the fair value gap. And then it's gone. There's the trade right there. You could look at that. You could even go to the lows, but you can go to the bodies. 1:3 long time ago. What a beautiful 1 minute right there. Let's look at the 2 minutes. Nothing really on the 2. 3, 5. So mainly just the 1 minute. Look at all that accumulation, manipulation with one candle, sweeping all of this liquidity here, here, all of this liquidity, just touching the lows, barely, right? And then having a strong reaction up to inverse. God, that's just like perfect. What would have made it better if that there was a fair value gap here, but you can't really have that because that's the lows. So let's see if this is actually a beautiful setup or not. Okay, so let's just draw a line here. Let's just do this, and let's look to the left. Let's see what is to the left. Let's go to the 15 minutes. Okay, so we have a fair value gap that has been respected on the 15. Let's look at the hourly. What's going on here? Okay, the 30 minutes. Also a fair value gap. Let's look at the hourly. Respecting an hourly fair value gap. Let's see the 4 hour. It's always hindsight, guys. Just respecting a 4 hour. I mean, if I went really deep, I could have looked and found that, but we were not paying attention. Damn, that would have been such a good trade. This would have been an A+ setup. Okay. Not A++, but A+. Because you've got accumulation after a pump down a little bit. So it shoots down, takes all the liquidity to the left, almost takes the lows at the London lows. Basically, it is a liquidity sweep. And then a sharp inverse. And there's one retracement candle down, the next candle, and the very next couple candles could have been an entry there as well. So you have one entry and two entries. So you have double times to enter there. This is why the 1 minute is so good, guys. If you don't clearly see anything on the 5 minutes, you go down to the 1 and the 2 minutes and you can still find these AMD setups. Okay. So that was one we missed. In terms of call outs, we missed it. Okay, so now this has completely been invalid. Right? You'd be stopped out at break even anyway if you took that. So this has inversed on the 5 minutes. So we still have 7 minutes on the 15-minute inversion here. But it's just, look at this consolidation. So my theory of Euro coming down to take London lows, unless it's coming up to sweep area, sweep this and then come down, I don't know. It's hard to call at this point. Okay, so gold is still looking promising, guys, but you can't now take it at this fair value gap. Why? Okay. Now, this is something you guys need to learn very quickly. Okay. See how now there's two fair value gaps on the 15, right? Why would you not take it here at this inversion? Why would this not be a trade if I did this? Okay. So let's say I did that. Why would this be incorrect? Because there's a fair value gap above it. If there were a couple of these candles in between the fair value gaps and it was a bit of a distance away, that's fine. Then this would be the trade here. Okay. But because it's not, and it's literally fair value gap, then you need to wait for this one and even put the stop loss below there in case it comes down to test this fair value gap. Make sense? See how this 0.786 level has been tapped? That means the OTE level and the golden pocket has been tapped. So I'm going to get rid of this fair value gap because it's just cluttering up my charts. This is the important one, okay? So in the next couple of 15-minute candles, the next one or two candles, if they inverse here and close above, then great. Are you talking about gold? 4-hour fair value gap below. You're talking about this area. That's where London lows is. That's why I said to everyone, I said if it bounces off this OTE level and comes up and inverses this, then you're good to go. But if it just comes back down and takes the London lows, which is also another area that I expect it to go to, then you have to see what happens when it gets there. That's what I told them. Kani. Okay, let's see. This might not be the most exhilarating stream you've ever seen, guys, or the most exciting, adventurous, breathtaking, popping, jumping around. You know what I mean? Like, it's not one of those streams. Yeah. So, like I said, guys, you could have taken this retracement here. It's entirely up to you. This has now inversed here. It's now, if you look at the 2, let's look at the 2, let's look at the 1. Very interesting price action. Okay, everything's bearish right now. Let's look at this. It's moving in the same way. So if we get if we respect this fair value gap, then you could potentially look at, even though there's a market structure shift, I would say this is still a target that is interested. So you could look at like a long from there, stop loss here maybe. Something like that. I don't know. If this inverses, then you obviously don't take the trade. Because if this inverses to the downside, then we're still going to come down. But if this respects it now and pushes up and closes here somewhere, then you could look at something like that. See how gold is moving? We've respected this area, okay? And now we are about to inverse the first fair value gap. If this candle inverses this fair value gap here, then you guys can enter into a long there, or wait for the retracement down and then enter for a better risk to reward. Okay, why would this be a valid trade, guys? Because we have respected the OTE level, we have respected the golden pocket area. Okay, there's a 5-minute fair value gap here that it's respecting. Okay, there's accumulation, manipulation. We've left a 15-minute fair value gap higher up here. We are now going to inverse, which means it's now picked a direction if it closes above, and then it's going to go all the way up to this 5-minute fair value gap. Well, technically it'll be a 4-hour and 1 hour and all that stuff. There, right? But there is a 5 minutes there. Okay, so that's where I would target, is that 5-minute fair value gap. We are bullish on the 4 and the 1 hour, so it is entirely up to you guys. I am just providing commentary, and this is exactly what I said when it was coming down here at this level here, this candle at 820. I drew this up and I said to you guys here, I said, if it gets to this level here and bounces off, it needs to inverse this fair value gap here at the top. Your stop loss is where you decide to put it. If you decide to go all the way down here to be extra safe, then you can do that. At the bodies, you can do that. Okay. You would then see if there's a fair value gap it creates here. You could then put it there. You would then need to decide on your own whether you are putting a big fair value gap, I mean a big stop loss or not. Also, it depends on where it closes. So you're probably looking at something like that. 1 to 2. That's probably more realistic. So let's see if it's going to respect these fair value gaps and come down to take London lows. It could very well do that. Remember what we said, if it inverses this fair value gap here, guys, then it's probably going to come down to this area, previous day low. Okay. We've just drawn these up, this one up, okay, as a potential long if it closes above. Because if it doesn't close above, then this long is no longer valid. Everything else is bearish here, guys. So this will be a risky long no matter what. So today's price action, this happened when we were not on the charts, just before we came on the charts. So we didn't see this. AMD on here would have been, the 1 minute would have been the best trade so far. So your trade would have been easily 1:3. Boom, right there. Stop loss at the lows, or probably at the lows there. 1:3 there, done. Easy. Easy. Okay. That would have been a clear, easy, no-brainer. If we saw it, if we were on the charts and we saw this, it would have been simple, done, take 1:3, done. Okay. Nasdaq, like I said, we were not watching. This was when before we jumped on, so this was just a potential before trading started trade, basically. So yeah, guys, very interesting price action today. Gold isn't really looking like a long anymore for some reason. It's looking like it's respecting these fair value gaps that it created. And it's going to come down and take the previous day low. I mean, not previous day low, the London lows. Which, like Khan said, is inside a 4-hour fair value gap. Right? So this is a very strong draw in liquidity. Um, this is also another strong draw, this 4 hour here. Okay, so we could actually see a decent short down. But I was looking for a long off this OTE level. So this is the trade I was looking at. It didn't get there. Well, it hasn't got there yet. Um, so we'll see if that plays out or not. This stream is more for educational purposes and more for like people that are trading like demo accounts that want to learn, you know, that type of thing. If you have live accounts that you're copying these trades from or that you're putting these trades in, I don't know if I would recommend that. Okay, because I'm on a journey the same way you're on a journey, and I can make mistakes the same way you make mistakes. So I would not recommend copying it into a live trading account at all, because things like this happen where we want it to go up, but what we want is irrelevant. We are reactionary traders. We trade based on what the price is reacting to. So yeah, yes. Later, because I'm working at the moment. Okay. So that's what I'm looking at, guys. All this accumulation on euro, I really expected it to come down to this London low area. Look at that, guys. Look at that reaction. Wow, look at that reaction. Okay, it's respecting off a 5 minute fair value gap. It's respecting off a 3 minute. Let's see if it creates a 2 minute. It's respecting off a 2 minute. There's a bit of accumulation here, not much. It's creating a fair value gap. Let's see if it stalls here and creates a fair value gap. If not, it could just blow through. There's accumulation here. It's respecting off multiple higher time frame fair value gaps. Okay. All of this is slow accumulation. So if we get a fair value gap here, we could look at a short down to the level that we were targeting. The only difference is that we are on a 1 minute time frame now. All like it wants to do, it just shoots up. So we have created a fair value gap here, so we're going to draw it up here, guys. There's the fair value gap. Couple minutes until market open. So volume is going to come in any minute now. So a 2 minutes is forming as well. This can now be taken away. Let's see, guys. Let's see. Let's see. So we would then now look for this type of thing. This is what we would look for. A 1 to 2. Almost a 1 to 2.5. That's if it inverses here, guys. Remember, it needs to inverse this fair value gap. Because you got a bunch of accumulation. Although we have been pushing up, you got a bunch of accumulation, manipulation up, sweeping all this liquidity. Okay. Fair value gap that it's respecting on the higher time frames. And this could potentially now go reverse and go down. Or I could be completely wrong and it just shoots up. See how there's a 15-minute fair value gap? It's probably a 30. Yeah, there's a 30. There's an hourly. This is a really key level right here, guys. It doesn't seem like it, but I'm telling you now, this is a key level. If it keeps doing this sideways movement, then this becomes less and less valid, this 1 minute. The longer it takes to inverse the 1 minute, it becomes less and less valid. Market's about to open, guys, so if any trades are about to go in, then there's a lot of volume about to enter in the market. So it's now respecting a small fair value gap. I mean, look at gold. It's indecisive. It just goes up and down. Market is open, guys. Let's see. Let's see. There's a 2 minute now. There's a 3 minutes. There's a multiple time frame. Thank you so much. Appreciate it. Just got a little bit of lunch here, guys. Going a bit sideways. Very interesting. This was the trade. Trade of the day was here. Either there, and you target up, or here at the inverse, target at the bottom, target up. One of those two. Hmm. Knowing you've already got your trade and you already sorted, guy. You haven't sent me a message saying, damn it, I lost this one. So you've got your trade already. Or it's still running, one of the two. I know what you would have done. You would have taken your trade here somewhere and taken the short down, and you would have done something like this. As it shoots down, something like that. Your stop loss will be huge. And it'll be all 1 to 2, and then you'd be like, I'm still waiting. Like, maybe it'll come down a little bit more. Like, I know you, bro. There's no ways you're not in a trade right now. No ways. I know you, bro. I don't believe you. I think you went down to this level and you took a long somewhere here. This retracement, boom, you take it along like this. This is you. There, long, stop loss, down here somewhere, there, and this is you. Stop loss down here. I'm telling you, that's you. OTE level comes up, comes down in this fair value gap on the 3 minutes or the 2 minutes, and you say to yourself, fuck it, you're just gonna get in. And it will, you know, the thing is, is that it will probably work, right? Because you are you, right? So it probably will work. But to say that, I'm not in a trade, I know you're in a trade. All the stalling I don't like. If this had come up after this green candle, the red candle, and the next red or green was over there, like boom, boom, and then came down, and then boom, you could enter, but all of this, boo. Yeah, I told you your trade would work. Respected the fair value gap, boom. Yeah, see? Your trade, as it comes up, yeah. This is where you would have got in, there. Boom. Stop loss at the lows. There. This is your trade. I've known you for years, bruh. This is your trade. I know you. Fibs from here to here. OTE level. Taps the OTE level. Comes up. Comes down again. Respects the fair value gap. Starts to push up. Right, there's your entry right there on the third green candle there. There's your entry. And you would have went, fuck it, I'm in. Stop loss below there. Right? And, or knowing you, stop loss down here at the lows. Right? There's your 1 to 2. I'm predicting your own trade, bruh. I don't even know if you're in a trade, but I'm telling you that you're in a trade. I know that you're in this trade here. There's no ways that you're not in this trade. How is it that I know the trades that you are in without you even telling me? I wonder how that is. I don't know if you would have went right to the lows there with your stop loss, but I think you would have at least done this. There. You would have at least done that. Then your break even should technically be here, as above this fair value gap. I'm not in this trade, guys, but my friend Khan is in this trade. Even though he says he's not. Thank you for the follow. Appreciate it. Even though he says he's not in a trade, I've known him for years, and I know the way he thinks, and I know the way he trades. And there's no ways that he looked at this OTE level being tapped like this in a 5-minute fair value gap, there's no ways he looked at this and went, no, I don't think so. Nah, I don't think so. Nah, nah. And then goes, nah, I'm not going to risk it. I know him. The only thing that would have stopped him from entering this trade, and it's the only reason, is the time. Market open had just happened. That's the only reason that he would have not entered into this trade. Plain and simple. It's on market open. So maybe that swayed him not to enter. But that's literally the only reason Khan maybe didn't enter this. I still think he entered. Because Khan's a type of oak. He will catch all these moves before they happen. You guys have no idea. You guys actually have no idea the mysterious power that this man has. His ability to see this. I mean, we called it as well. Right? We did call it. Okay? The only thing is that the inverse is there. Right? So this would be Khan's setup, and this now would be our setup. We would wait for a retracement in here. So that's our setup would be there to maybe stop loss below this fair value gap there. So Khan would already be in this trade, and we would wait for this retracement. So we're going to wait for this and then that. That's what we're waiting for. Might not get it. It might just touch the top of the fair value gap and go. But hey, stranger things have happened. See? Like that. Like that. So if you did enter at the inverse, which is perfectly fine, your stop loss would have to be bigger, but your end goal would have to be the same. So your risk to reward might go to there. But we would, oh, there you go. Where was it? It was here, hey. Oh, there. So we would now be in this trade. This would be a call out right here. Okay. This is Khan's trade that I know he's in. He says he's not, but I know he's in. And this is us, and we would have entered into this one. Stop loss below there. Okay, maybe slightly bigger. For a 2.5. So let's see. Let's see it play out. Khan got a good entry. And let's see our entry. If it plays out. That's no longer valid because it did not inverse this fair value gap. And I think this fair value gap is now really irrelevant because of this. Interesting. Okay, so it didn't pump up, which means we didn't enter that. So it inversed this fair value gap, which is interesting because it inversed that one and then inversed this one. Okay, so it's going to the original target, which is previous day lows. That's what I initially said it's going to go to. Let's see what happens when it bounces off it. I reckon we've had a decent day so far. We missed a few entries, like the trade of the day here. Okay. So we missed one because we weren't watching. And we missed the NASDAQ 1-to-1 here because as it was like over here somewhere where we logged on. So that one wasn't valid. So this one, let's see if this one plays out. This would be a call out. Hello. Oh, the light's not even on, so I didn't even bother. Yeah. Go for it. Khan would be at break even now. At least break even, I would say. Interesting, interesting. Ah, interesting. Let's see, guys. Testing the fair value gap. You could have waited for a green candle to close above here. Absolutely, right? Since this 5 minute to the left did not inverse. So I only put this trade up here because the 15 inversed and it came down, retested. So I'm anticipating this to go up. But to be safer, on the safer side, you would not be in this trade right now. You would wait for a green candle to close above this line here. There. For you to be safe, this next green candle has to be here somewhere. And then you would enter, or you would wait for a retest and then enter. That's to be completely safe. Okay? Make things very clear. A NASDAQ, let's look at the market open is here. Okay, so horizontal line, this is 9:45. So that's, and this is your orb strategy. Now guys, the orb strategy is a price can do it at once inside here. Okay, it's the 15 minutes from the time that market opens, which is 9:30. Then you take the top of the candle to the lowest part of the candle, 15 minutes. Okay, now the theory behind the orb strategy is that if it if it breaks through here, okay, and retests a fair value gap on this line or just under this line or just over this line, retests that fair value gap and starts to push off, that is an entry that you can look for. On the other side, I have seen people that if price goes up here and inverses a fair value gap, then they target the lows here because they feel that the price will go from this high to this low, if that makes sense. So that is the orb strategy in a nutshell. If price pushes down and takes a bit of the orb strategy, the 15 minutes, and then inverses strongly, then you're looking at targeting this top opposite area, okay, and then beyond. So if this pushes up and breaks through here, comes down, tests a fair value gap that it created on the way up, and then starts to push up, then you'll see a bunch of people enter because this is the orb breakout. That makes sense. Now, there's obviously different ways to trade the orb strategy, and there's different ways that people do it. Some people will take the first 5-minute candle and only the first 5-minute candle. Okay. Some people will take the 15. Some people will take the 30-minute candle. Okay. It just depends on personal preference. The most common one that I have seen is the 15-minute orb strategy. That's the most common one. All right. So in other words, that means if price breaks above, then you're looking for a long. If price breaks below, you're looking for a short. However, if price respects the top and makes a strong move down, then you could look at shorting this inside the orb to the opposite end, because now you are targeting the top to the bottom. So you are now in your head, that's where price is going to the bottom. So you need to be very cautious and careful in that regard, because sometimes price doesn't do what it wants, what you want. So you've also got to look for SMTs. You've also got to look for things like that when it comes to the orb strategy. You don't just look for a break. See how ES is actually stronger than NASDAQ right now. NASDAQ is struggling to push up. ES is blasting through. So you're probably going to get NASDAQ respecting the fair value gap area, where ES might not, which will create a SMT, because if ES pushes up like to here and NASDAQ doesn't even break this fair value gap, then there will be a SMT formed. Does that make sense, guys? Okay, this price action is looking quite decent right now. Now, as I said, you could have entered down here and been more, how do I say, safer with your risk to reward. So you could have taken your stop loss and put it where Kynes is. Okay. Because Kyle, if you didn't take this trade, then I'll be disappointed in you, bro. Highly disappointed. Here comes the rain, guys. Well, I guess the rain is going to ruin a little bit of our stream because it's going to make a hell of a noise. So I think I'm going to call it there, guys. We have our setups that we're looking at. We have everything that we're looking into. 10 a.m. So there's going to be a reversal at some point. But gold, you should look at the longs here for gold. You don't have to. I'm a peg, remember, so don't take what I say seriously. Khan's in a trade here. I know he's in a trade, even though he says he's not. Okay. And yeah, we learned some lessons today. We learned that yeah, sometimes it doesn't need to hit the previous day lows. All right, guys, I'm going to end it there because it's going to get pretty loud here, and I don't really want to interrupt the stream like that. So take care, guys. Manage your risks well, and I hope you guys are trading on demo accounts to learn. Have a good one.